Hey guys, good afternoon, everybody. Today's Thursday, August 17. It is 2:03 right now. Our scheduled mentoring sessions for 2 o'clock. So it's getting on right now. I'm going to go ahead and set this room real quick and we'll get started with the mentoring session shortly. So if you guys have any questions, feel free to put them in the chat. Otherwise, we don't really have anything lined up for today. So whatever questions you guys have, I'll answer them in order. And then we'll be on this session for as long as we have questions. So update a few more things here. That's good. All right, perfect. Let me get this link sent out to you guys here in the premium. All right, link is all sent out. Give a few moments for people to make their way in. And then we can start shortly. More places here to send this out. All right. So I'll get a few moments for people to make their way in. I know we're starting a little late today, so let people join in. Yeah, we'll get started shortly. Let's talk this over. It's like we are good to go. All right, guys, good afternoon, everybody. Today is Thursday, August 17th. It is 2:07 right now. Our scheduled mentoring sessions for 2 o'clock. So if you guys have any questions, feel free to put your questions in the chat. We don't really have too much to cover today. We just had a couple of people ask for some examples for the momentum pullback scalp that happened after the live session today. So basically, after 8 o'clock, as you guys can see right here, the volatility started picking up after 8 o'clock. So there were some entries that did come up. We didn't take it because my cutoff was 8 o'clock, but that's pretty much all the questions we have for the most part. So if you guys have any other questions, feel free to put them in the chat. I'll be on this session for as long as you guys need me to, or for as long as we run out of questions. So yeah, whatever questions you guys have, feel free to put them in. But I guess I can start off by going over some examples of entries that happened after the live session. So it looks like some people will continue to trade after, which is completely fine. It's just, it's up to preference. For me, I don't like trading after 8. I typically lose trades after 8 o'clock. So I generally just don't trade around that time. So I'm going to go ahead and mark up the levels over here real quick. I'll just mark up the lower levels because the higher levels, I mean, we obviously didn't have any more buys until, or no buys that are high enough to really go up that high. So I'll mark up the lower levels right here. And then we'll continue on with the examples here. 8, 9, 80, 70, 60, 50, 40, 30, 20, 10. All right. So I'll go over the first example over here that I can see. So the first example that I can see happen right here at about, say, 8:05. So this is one question that we had, or that I had from one of you guys here regarding the momentum pullback scalp strategy. So I'm going to go ahead and put up the criteria here for the momentum pullback scalp. And we'll go over this in order. So starting off with the first requirement, first you want to identify the direction of momentum using the momentum indicator. Looking at this right here, we have a sell momentum. Next, you want to confirm the trend using the pivots and the trend meter. So you can see over here that the pivots are angling down. You have price below the pivots, and lastly, you have the red pivot above all the other pivots. So that's going to confirm that we're in a downtrend with regard to the pivots. Also looking down below, we have a red trend meter. So this is going to indicate that we have a bearish trend. Once you've confirmed the momentum and direction, you want to identify a push in that direction. So as you can see over here, we had a sell signal, price push to the downside. Retraced up right here, no entry, came down lower, and then retraced up again right here, right? So with that said, after this momentum signal, there was no entries in between. This is the first pullback where it's actually touching a level. So right here, after you've identified momentum for a sell, trend for a sell, you identified a push in that direction. Third, you want to identify a pullback. That pullback is going to be this green candle right here. Once you've identified that, you're going to enter at the nearest 10th mark. So right here, you can see that the nearest 10th mark is at the 60, right? So that's where your entry would be for a short right here. And then you would set your TP stop loss to 25.50, or sorry, 10.25. Looking down at the ATR over here, ATR is currently it was at 16 at the time, so it fits criteria. ATR has to be above 15. It's not required, but it's obviously you want volatility in the market. So in order to have a smooth entry, you want to make sure that the ATR is above 15 at the very least. So right here, it's at 16. Everything kind of lines up. Your entry would be here as soon as price retraces up. Your entry would be at that level, the 60 mark. And you can see on this next candle right here that price pushes up. It doesn't hit TP yet, but it does push up and fill the order, right? So at this point, you would be in the order. It's at 8:05. It's after the live session. Would not be taking this trade personally, so I'm done trading at 8. And at this point, the trade is now running in drawdown. You can see that price kind of bounces around a little bit right here, kind of pulls back really hard and comes right back down. It's now in profit, has not hit TP yet, drops down further, full TP right there. So there goes one entry right there that happened after the live session. We had a question about this. This would fit criteria perfectly. And as you can see, it blasts right through the TP. So for some people, they took this after the live session and they would have recouped their loss that we took during the live session. Our loss was only about 13 points. So if you hit slippage here, you probably would have made, on top of that, more profit. So there goes one example right there. That's pretty much it with this momentum signal, because I typically only take one per momentum. We had another question though about another entry over here. So there was another one. There's actually a bunch here. So if you took multiple entries per momentum, there was another opportunity right here. I don't typically recommend it because the 1 minute's so choppy that, if you saw how the market was moving during the live session, you obviously wouldn't want to keep using the same momentum over and over again. So again, right here, price retraces down. Where price pulls down in this direction, it retraces on this green candle. If you wanted to take another entry, you could have taken another one right here. If you really, really wanted to, I wouldn't recommend it because obviously, the market's kind of slow. Let me see what the ATR was looking like. ATR was still at 16. So, technically, if you wanted to take a trade, you could have taken right there again. Price pushed down, retraced right here. You'd enter at the 50 mark. Next candle right here would have filled it. It's in some drawdown right here, but then eventually it comes back down and it hits TP. So there's two back-to-back entries right there. Let me see, there's another one here. Same thing again right here. Price kind of pulls back with this green candle. Your entry would now be at this point if you really wanted to take these. Again, these aren't necessary, but some people like to take multiple entries. So again, right here, price retraces back. So the next entry point would be at the 60 mark right here. So let's see if price pulls up a little bit. It doesn't. Price pushes down lower. Another retracement right here. Entry would be at the 50 mark again right there. If you wanted to keep following it, it doesn't fill. Price drops lower. Price pulls up again right here. Entry would be at the 40 mark. Doesn't fill. Price drops lower. Lower from there. And as you can see, price just keeps dropping lower and lower. So another opportunity right here at the 30 mark, if you wanted to take multiple entries per momentum. Again, I don't do that. So this wouldn't really apply to me. Same situation here. Still hasn't filled. Price drops lower. At this point, I think price would be overextended. So I for sure wouldn't be taking any more entries at this point. So if you measure price from this high up here, it's dropped down 1,200 pips. So at this point, for sure, I'd be done taking, if I was even taking any of these. Let me see what the movement was over here. So at this point, you could probably take the other entry here. So there was a second entry right here. It wasn't overextended yet. So it wasn't down to 1,000. But at this point, for sure, I would consider it overextended. I wouldn't take the entry anymore at that point, even though price does continue to follow along over here. Again, right here, there's another sell signal. Price retraces, doesn't fill. Price comes back down again right here. Pulls back to this point. You could have taken an entry here, then you have to close out for a small loss right there when it came down. So if you were to take the entry right here, I mean, this is why I don't trade after 8, because you start to get some choppy movement. So the entry would have happened right here. And the sell signal would have happened right there. So you either would have pulled out early right there for a small loss, or you would have taken a full stop loss. I mean, depending on how you would have wanted to approach this. But typically around this time, I mean, 8 to 9 is usually, a bit of a risky time of trade, because obvious reasons you get a lot of this choppiness. Over here at 9 o'clock, this is typically where you might want to look for entries again. So I'll look for some more opportunities right here. Sell signal right here, bearish trend, price pushes down in this direction, retraces right there. You have another entry right here for a short at the 80 mark. You would have had that set up right there. As soon as price pulls up, it would have filled your order and would have went straight to TP. So as you can see, there's a lot of power here if you're going for just one entry per momentum. Obviously, you have a lot higher quality entries. So that's why I personally only go for one entry per momentum. Other than that, I don't think there is. Let's see if there's one here. The trend never really shifted up until this point, so there wouldn't be any entries at this point. At 9 o'clock, price drops back down. Trend is still kind of mixed. Price pulls back up right here. All right, at this point, you look for a retracement. All right, so the retracement would have happened right here. So here's another example later on in the session. This was at about 9:56. Yeah, exactly. CT said right where he got in. So like, for example, right here, there's a buy signal. The trend starts to shift to the upside. You can see the red pivot below all of the other pivots. Trend meter down below is green. Everything's indicating you can take a buy here. So identify direction momentum. We have a bullish momentum right here. Identify trend. Prices above the pivots. Pivots are angling up. Red pivots below the other pivots. Also, trend meter down below is green. Everything lines up here. Second requirement, identify push in that direction. You got the push right here. Third, identify a pullback. This red candle right here is a pullback. This is where you'd make your entry at this 30 mark. You got it set to 1025. You let the trade pull back. It fills your order right there. You're now in the position in some slight drawdown. Price kind of goes sideways for a bit. Swings back up. Full TP. So there goes another entry right there. So I mean, that's the main question I had for today, guys. It was basically covering momentum pullback scalps that happened after the live session. As you can see, there was a couple entries here. I mean, depending on how you want to trade. For me personally, I know I lose trades after 8 o'clock, so I don't typically like to trade after 8 unless like I have good reason to trade. most of the time there's no good reason, right? Because you don't have to force anything anymore. There's no time limit for your challenge. So I prefer to just take, quality trades at least 1 or twice a day and then calling it a day instead of being on the charts for like 12 hours. I mean, it's doable, but me personally, I wouldn't want to do it. It's just too stressful, in my opinion. So let's see if there's another entry over here that came up. So again, right here, same situation. Price starts to shift, retracement happens right there, it doesn't get filled. Retracement happens right there, it doesn't get filled. Let's see if there's anything else over here. Okay, so price does pull back again right here. You'd have to pull out for a small loss right there as an opposite signal. Again, I wouldn't be trading this late into the session, so it wouldn't really matter for me personally, but just looking for some examples over here. There's a couple examples, but they're not really that clean. Like, for example, again, right here. I mean, these entries hit, but they're not entries that I would personally take. So I don't really try to, encourage anybody to trade outside the live session, unless you really know what you're doing, right? So for example, again, right here, sell signal. The sell signal is a little big, so I probably would have held off on this. It's not that big, actually. It's only 20 points. So if it's like 30 or above, then at that point, I for sure would avoid it. Anything above 25 points is probably too big, because if it retraces up, it's going to have to hit your stop loss. So right here, price pushes down, sell signal, bearish trend, price below the pivots, red pivot above all of the other pivots, trend mirror down below is red. We have price pushing this direction, retracement. Your entry would be right here at the 30 mark. $10.25 right there. You would have let your trade fill. It would have filled right there. It doesn't look like it hit TP yet. And there it goes, hits TP. So you guys can see that there is opportunity to trade outside the live session. But for me personally, I just don't like the risk of trading after 8. So, I mean, if you guys wanted to trade, you guys could. I just went over a bunch of examples here. There's a couple examples here at 8 o'clock. They both hit. Example here at 9 o'clock, it hit. Example here at 10 o'clock. You can see that every hour there's at least like maybe 1 or 2 entries, as long as the volatility is up. You can see over here that the volatility is actually pretty low, so I wouldn't even be trading around this time. You can see the ATR is currently at 12, and it's not really worth trading, even though it does hit right here as well. Same thing with this entry over here. It hits, but the volatility is super low. If you go to the entry point right here, the volatility is 13 at ATR, right? So it's not really worth the risk. Again, you want to make sure that you're trading this when it's volatile, because that's where you'll get in and out of these positions super quickly, right? So for example, over here, it's 15 at this time right here, right? ATR over here was 15. This was a perfect entry. Price would have filled, and it literally would have blasted straight to your TP within like a few seconds, right? A few seconds or a minute at max. These over here as well. ATR was at 16. So you can see that price kind of pulls back a little bit, but it shoots right back down and hits your TP. So you want to trade this when the volatility is high, especially if you're scalping. You want to know right away if you're right or wrong. You don't want to be holding on to that position for like 5 to 10 minutes, because it goes from a scalp trade to an intraday trade, right? Or a day trade, which you don't want to happen, because you're scalping, you're not day trading per se. So let's see if there's any other questions, guys. Feel free to put them in the chat. I don't really have much to cover, like I mentioned earlier. It's just the only questions I had were to cover examples after the live session, and I just covered a bunch right here. I don't mind staying on with you guys, but I don't really have a schedule for today. I know this mentoring session is kind of late in the week, so a lot of people aren't even here right now. But some of you guys asked for it, so I don't mind coming on to answer questions. Let's see, Barty over here said past 4 days, he's at break even, but thank God I am break even. Price moved a lot today. Yeah, Barty said price won't move and be choppy. Thanks for all your workshop. Yeah, definitely, Barty. And congrats to you too, because I think, Barty, you passed your what was it, funded trader, right? So I think you got funded with them, or let me see. Yeah, so Barty over here on August 10th, so about a week ago, he passed his challenge for the funded trader. I haven't used the funded trader, so I can't really recommend them. But Barty here passed using our strategies and just following our trades here, and he's on his way to get funded. So we'll see what happens. Once you get to payout, if it's legit and they pay out and they're good and their servers don't change once you get funded, then I'll be willing to give them a shot. Because at this point in my trading, I'm just looking to add more accounts to my copier, right? I have 2 Top Step accounts. I have 4 FTMOs, 3 MFFs. MFF kind of sucks, so I'm looking for a funding company to replace them. But we'll see. I don't know. I don't have anything specific where I'm necessarily testing right now. I was going to test a couple, but I just don't want to waste my time. Like E8 had if you guys have tried E8 funding in the past, they had really high commissions. The spread kind of sucked and it was just hard to trade with them. They dropped the commission, so I'm not sure if they're good now, but I don't want to go and open an account with them and then, have to go through the hassle of getting funded. And then all of a sudden, once I get funded, they put me on a different server, which sucks. So I just don't want to waste time and money on like these other funding companies until someone else has confirmed that they're good. Because a lot of them are not good, to be honest. Like a lot of funding companies out there can't compete with FTMO or can't compete with Top Step. I just wish that Top Step they had like a legitimate copier, because the copier we're using now is okay, but it's not amazing. Like it could be better, a lot better. Let's see. CT said, gosh, okay, yes. CT lost 1 and he won 1. It's all good. You got to recoup some of your losses. So, all right, guys, if there's any other questions, feel free to put them in the chat. We've only been on this mentoring session for about 30 minutes. I'm willing to stay on longer, but if there's no questions, there's just nothing for us to cover today. I'm going to try to update the videos, guys. So I think over the next couple of days or next couple of weeks, I'll try to update the course a little bit. I'll make an official video for this momentum pullback scalp. I just wanted to make sure that this strategy was one that we would stick with. Initially, I thought it was going to be a hard strategy to teach, but it's actually not that bad. Like a lot of you guys actually pick up on it pretty quickly. And I think I just need to create a video where it gives like a very clear breakdown of like how it's applied so that you guys can really master it. I think this is going to be one of the main strategies moving forward. I don't think this is one that's going to change very often, because I think this does, it moves well with the market. All the other strategies work well as well, but I like the way that we can cut our losses early. So for example, today you guys saw our loss from the live session, right? So for the live session today, this is a loss that we took. The loss was really small. It was only like about 100 pips or 130 pips versus losing a full 300 pips, right? So it makes sense for us to just cut our losses early and move on to the next trade versus our other strategies where it kind of sucks, because if you do take a loss, it is a 1 to 3 risk reward or a 3 to 1 risk reward. So even though they don't lose very often, it does suck when you get set back. So that's why I like using this. I think this is more productive for us. And I like the fact that we can put pending orders versus, entering a market, because it makes it impossible to do when you're trading on Top Step and MC4. So let's see. Madhu said, do you mind going over the breakout entry you took Monday? I almost entered that trade, but I hesitated because the strategy says wait until 6:30. Yeah, sure. So let's go back to the breakout entry from Monday. There's a couple other factors that played in on Monday too, Madhu. So I'll have to look at my notes or like our screenshots from Monday, because I think the reason why we took that trade too is because of the bias. The bias is bullish. And that was a reason. That was one of the main reasons why I was okay with taking it. I think it lined up with a couple other entries too, like liquidity. So I think, there's a lot of different factors that played into that entry on Monday. I typically never take the breakout. But I mean, I didn't even have a computer that day. I was on vacation. I was trading on my phone. So actually, I don't even have much to look back on. All I can say is that the sentiment was very high. That was one of the main factors. But we'll go back and take a look over here. So let's go to 6:30 right here. Yeah, so for the entry right here, I actually got in early. So I got in early at 6:29. Well, this was because I was trading on my phone. I wasn't able to really look at the time because I didn't have my screen on me and I was just looking at my phone to see how market opened. There was a couple of factors that caused me to take that trade. Obviously, I don't have notes because I wasn't at a computer. I just typed it up here. Yeah, so I put over here, I said, took the good old breakout on open based mainly off the 75% short retail sentiment. Trade was exclusively on my phone, so I had to pull out manually. So like for this trade right here, main reason why I took it was because the sentiment was so high. If you guys remember sentiment from last week, it was like in the 60s. Over the weekend, it went up to 75. So I knew that price was going to push up to some extent. For this here, it wasn't like a normal breakout because obviously it happened too early, right? This over here, I wouldn't take this candle because this candle is obviously too big. So this wouldn't have been an entry that I would have taken, right? I would have taken this one right here because this candle looked normal. I just didn't know what time it was because I was trading on my phone. I did everything off my phone. I had the retail sentiment pulled up on my phone. I saw that it was 75%. And then I went straight to my chart. And then I had to switch between my chart and MT4 because I can't execute trades on my trading view. I had to go on my MT4. So main reason for this entry here was I saw this candle right here with the buy signal. So right here, price was going down. Sentiment was super high. And what I noticed here was, so there's a couple of things here that I marked up. It was before this candle even came up. So before this candle came up, I marked up liquidity on pretty much on my phone here to see where was liquidity sitting. So I had a couple levels right here, weekly, and I'll just keep them blue so that you guys can see them a little better. Weekly, daily, eight-hour. Go back to the daily. So mainly what I did here when I was analyzing it was I looked at sentiment. So I knew that sentiment was 75% short. And then the main thing I did here was I marked up liquidity because I was like, okay, price needs to push up. It's going to have to hit these levels of liquidity here. And that's why I was so convinced to take a trade because obviously, I mean, you just use your common sense, right? 75% short, anything that pushes up, if it hits liquidity and it's a high level liquidity, it's going to blast right through. That's where it's going to go. So had everything marked up there. I went down to the 30-minute. I don't even think there was liquidity on the lower time frames. It was all high level liquidity. There was like one level right there. Okay, so we had everything lined up like this. Went back to the 1 minute. So going back to what I was saying, dude. So first I looked at retail sentiment. It was 75% short. It jumped about 15% from the weekend. So like, okay, this has got to push up to some extent. You know, if there's a lot of sellers just chilling right here, they're expecting price to go down when price is actually going to go up. So when price kind of spiked up, or it was going to spike up, I think I even marked up liquidity on the lower time frame, on like maybe the 5, because what happened here was I saw this. See how this big drop right here happened between basically London session. So pre-market, London into pre-market, this big drop right here happened and there was no highs right here on this area. So I was like, okay, if price dropped to this point, it's probably have to fill this gap right here, right? Because price just gapped down basically from this point. I think I started from the 15, or was I the hour? Okay, so this is what I was looking at. I was kind of looking at this drop right here with no retracement. So I started from the hour and I was like, okay, this is going to have to probably retrace up if it does push up. If and when it does push up, it'll push up. Went from the hour, went down to the 30. I was like, yeah, okay, these are straight red candles. Sentiment's super high. It's going to have to retrace back up. Went down to the 15 right here. I saw there was a little bit of retracement. It was in consolidation. And I went down to the 10. I was like, okay, price is definitely consolidating right here. And it looks like it's setting up for a push to the upside. Another thing that I looked at here is I saw the V3 pattern. So I saw the low here with the red candle, and I saw this green candle following it. After we saw that right there, or once I saw that, I went down to the 1 minute. I was okay, price has been consolidating here for a little while. If it pushes up, it's going to hit liquidity. And then on top of that, it's probably going to keep pushing up higher to knock out this liquidity. I think on the 1 minute, I also marked up liquidity here. I don't typically do this anymore, but if you guys remember the original liquidity strategy, I mentioned if there's a lot of liquidity sitting in one area here, especially if the sentiment's super high, this is going to be a big area to shoot through, right? That area of liquidity right there. So I think what I did was I marked up a lot of liquidity here on the 1. I was just looking for reasons to take a buy. I was looking for whatever reason to take a buy, like whatever confluences I can see. And I saw there was a ton of highs here that have not been hit. You got to keep in mind that this was Monday. So we're coming from the weekend and there's a bunch of highs here that are just waiting. There's going to be a lot of liquidity on open. So what happened here was price went up slightly right here. And this, I think this is what kind of convinced me. So this is what really pushed me to take this trade. Even though it wasn't 630 yet, I saw we got some push right here and see how all the liquidity is sitting at this area. That's where I was like, okay, this is for sure going to keep pushing up, because at first I initially didn't plan on taking breakout like for the full move. I just wanted to go for 100 pips. But the problem was I was on my phone, so I couldn't even pull out. I had to pull out manually. So what happened here is this happened, and I was like, all this liquidity is sitting right here. So it's going to have to blast at least to the next level, right? To this level right here. So I was like, okay, if this is the case, I'm fine entering on my phone, because if I enter on my phone, it's going to shoot right through, and then I can at least pull out, because I'm gonna be able to pull out manually. So this is what happened. See how it hit all the liquidity? So 75% retail sentiment. I saw all the lower level liquidities right here. I marked up pretty much from the weekly down to the 1 minute. We're coming back from the weekend. I knew price was going to push up. I think there was breaking news on this day too, because I woke up in the morning, I saw CNBC, they had some breaking news, and I knew price was going to shoot up. So this is mainly what I saw. Retail sentiment was 75%. I saw liquidity sitting right here. There was some breaking news on CNBC. I think there was news on that day. So let me check real quick. No, there wasn't news. There was something going on that morning though. I don't remember what it was, but let me see if I go back to the previous day. This week. So Monday right here. I don't remember what I saw, but there was something on CNBC. I wish I took a screenshot of it. There's something on CNBC. It was something about the China news, because there's China news over the weekend. And there's just a lot of confluence that pointed towards a buy. So for one, retail sentiment. For two, liquidity. And then on top of that, there was like some breaking news that I saw that morning. So I knew price was going to push up, and that's where I took my entry. So does that make sense, Madhu? I mean, there's a lot of confluences here. I can't give you a straight answer of like what I looked at necessarily, but there's a bunch of confluences that pointed towards a buy there. So yeah, that's the reason why I took it. I was only going for 100 pips, but you can see over here, I made a lot more profit. I made 2,000. So that's about 230 pips or 260 pips. So basically what happened here is price spiked up, and then I actually was able to pull out like right here, or I guess like right here. So price spiked up, and then when it came down right here, I was able to pull out manually. So I pulled out manually right here, and that's where I locked in my profit of 2,300. So I mean, there's no step-by-step process to like taking the breakout. You have to like actually know what you're looking at. For me personally, I did this all on my phone, so I didn't really have much to work with. I kind of just knew where the price was going. The price was going to go up. I didn't know how far it was going to go up, so I only wanted to go for 100 pips. But this is basically where I took it. Price spiked up, pulled back, and then when it pulled back to this 26 point mark, that's where I just manually closed out of the trade. Thankfully, I closed out, because if I held on to it longer, actually, I mean, I guess I could have still had opportunity to pull out, but luckily I pulled out of it right there, because I think price came right back down eventually, or there was a lot of opportunities here to take it. Here's another thing you could have done, Madhu. So like, if you didn't want to take that trade there, or you don't want to take that specific entry, you could have waited for it to pull back. So if you waited for 630 here, like how you normally should, you wait for this candle to close, you would see that this candle here is too big, right? Obviously it's huge, way too big right here. So you would have just skipped this, and your entry would actually happen right here. So if you would have waited for it, because you know you're looking for the entry within the first 5 minutes, price pulled up right here, it pulled back pretty heavy, it retraced to the entire candle, and then this is the next falling green candle that was strong. So the trend was starting to shift bullish. The trend meter was green, price was above the pivots. This was, I wouldn't say a strong green candle, but it's stronger than usual, right? Because the lower wick right here is huge, and the other wick right here is not as huge. So if you wanted to take this for the actual break, this could be the actual breakout right here. Mine was just, it was something I took on my own. I considered the breakout because that's what I was looking for, but this right here would have been the actual breakout. So if you would have taken it right here, I mean, you can see the volatility was pretty low. It's at like 20. So I probably wouldn't even go for the full, well, I for sure wouldn't go for the full 500. I probably would have gone for just 2020. I think I'd go off the ATR for a 1-to-1. So if you did that and you entered right here, See, price pushes up and it still would have hit your TP. It would have been enough to like blast right through. So if you do plan on taking the breakout, especially during low volatility, I would go based off the ATR. I would just go for a 1-to-1. Because obviously a 500 pip move is way too far out when the market's moving so slow. So, I mean, you maybe want to go for 25, but I would just go off the ATR because that's going to show you where the movement's actually going to move to. So yeah, that would have been the actual entry. Then right here, price does come back down and completely reverses. Yeah, so Medusa, yeah, it does. I look at sentiment if I was looking for a buy too, just didn't mark up liquidity on the 1 minute. So I missed the move waiting for on the open candle. Yeah, no, and I don't blame it. Like I haven't done this in a long time. I was just looking for so many reasons to take a buy. Honestly, I was just FOMOing because I was on vacation. I kind of wanted to take a trade and then be done with the day. So I was looking for so many reasons to take a buy. The main confluence, just like you said, was retail sentiment. But the liquidity here on the lower time frames is really what told me to take the trade, because this here is like perfect. Like if you would have seen this right here live, I mean, like for example, if you're like looking at the chart, I thought this was 6:30, but it was actually 6:29. Looking at this right here, this would have looked perfect, right? Because you have the 75% sentiment. You know, price is going to go up at least 100 pips. And it goes up even more, actually pushes up from this point. So I feel like I got lucky off this trade. You should never feel lucky though. You should feel like you should know that you know what you're doing. But yeah, if you took the full breakout there, it would have played out. This doesn't happen too often though, especially during the summer, because it's so slow. So if you would have based your ATR off this, it would have just been 15. I personally was only going for 10, but I got lucky here and price ended up pushing far back. So I was able to pull out like way up here. So yeah, I mean, it is what it is. At least you spotted the same thing I do. And then, you know, now you have other things to maybe take into consideration if you're looking to take the entry. But if you wanted to wait for the second part of the breakout, it would have been right here on this, let's see, at the 634 candle. So, yeah, I mean, I personally don't like the breakout because I think the breakout is too risky, especially during summer. But summer was when we used to first apply it, and it used to hit almost every time. It was also during COVID though, so it's a different type of market. This market is definitely slower compared to 2020, 2021. But all right, guys, if there's any other questions, feel free to put your questions in the chat. I'm willing to stay on here for as long as you guys like. But I just don't have any other questions here at the moment. Marty's asking, so how does all your MFF accounts get copied because you trade on FTL terminal? We use a copier, Marty. I use Social Trader Tools. Same tool I've been using for years now. It's a copy software. But it only works with like MC4. So unfortunately, I can't use it for like Top Step. Top Step's a totally different platform. We trade on Tradeovate. They have their own copier, but it's not the same. I have to do everything manually, which kind of sucks because you get like, it's hard to pull out a position when it's not automatic. You don't have a TP set. All right, guys, I think this might be it for today. If there's any other questions, feel free to reach out. You guys can email me, Sean@KodiKaiTrades.com. Again, if you guys are new here, feel free to go on our website, KodiKaiTrades.com, click on unlock your free access right here. This will give you access to pretty much all the videos and strategies that I've covered over the years with you guys. If you guys want to see any of the previous live sessions, just go to our YouTube channel, youtube.com/KodiKaiTrades. And then just scroll down. So if you scroll down over here and click on Kodi Kai Trades live trading sessions, this will have every live session that I've recorded and live streamed over the past 5 years now. You can see I have over 713 videos here. So over 713 live sessions. That's a lot of live sessions to count, right? Yeah, that's about 5 years of live trading here. So if you want to see how I was trading back in 2020, I mean, you can scroll all the way down, and you can watch my live trading session from It's today, August 17. Yeah, if you want to see how I was trading August 17 of like 2021, you can click on this right here. It'll pull it up. And you can literally watch me trade live 2 years ago. So I try to make everything all transparent for you guys. So if you guys ever want to like learn what I was doing back then, it's pretty similar to what we're doing now. So you can see over here, we still use retail sentiment 2 years ago. A lot of people are barely finding out about retail sentiment. I've been using retail sentiment for 5 years now. So if you guys want to go back and look, you guys can see my analysis from that day. This was in my old office, so you'll see my background's a little different. Pictures are still there, but this was in my old office. Yeah, so for this strategy right here, I think we were just applying the pivot scalp. We were applying the SR rejection scalp strategy, so the snipe strategy right there. That strategy still works. Talanji uses that every day still. So we're using the pivot scalp strategy. We still use that today too. And the snipe strategy. There is a ton of different strategies here that you guys can see that we still use today that we've been using for the past, 3 to 5 years now. So, all right, guys, if there's anything else that you guys have to ask, feel free to email me. You guys can email me, Sean at kodikaitrades.com. But I think that's about it. So, all right, guys, we're gonna wrap this up. If you guys have any questions, reach out. Otherwise, I will see you guys back here tomorrow.